How's it going, everyone? It's Sam. We have Tom Lee saying we have 3 signals that confirm a high probability that the bottom is in for stocks and crypto. We also have a very interesting chart. I see so many people going and referencing it right now with the M2 money supply, saying that Bitcoin looks like it's about to jump up to $230,000 like in the next few months. So I want to show you that. We'll also go through what the ETFs did yesterday, which is pretty crazy. They continue to buy. It's going to be a big week for the stock market too. Maybe we'll talk a little bit more about this tomorrow. But yeah, be ready for some volatility. If you don't mind, hit subscribe. Turn on the bell notification underneath the video so you can see future videos just like this. If you want to trade crypto, there are links underneath the video to Blowfin, to WEEX, BTCC, BTCC, and CoinW. You can start trading in just a few minutes, and you can use leverage. So instead of putting in $100 and being able to trade $100, you can put in $100 and trade 500 or 1,000, which means you can get better returns if the market goes up or if it goes in the same way as your trade. Now, you also don't need a KYC and you don't need a VPN, so it's really easy to set up. As you can see here, you put in your email, put in a password, check the terms and conditions, and you can start trading. Now, we have some interesting things happening. Obviously, Bitcoin's looking pretty good, sitting at right around 94,200. So he made this big move, came back down to 91.6, bounced pretty hard up to 95.5, which broke this prior resistance of 95,000. And yeah, I mean, the market looks really good right now. Alts are starting to move back up. We have Ethereum back over $1,800. We have Solana at 150, Sui back at $3.50. So yeah, the market looks much, much better. And we do have a big week this week, so be ready. I believe PCE is coming. It usually comes at the end of the month. Let's just double check on that. But we also have a lot of earnings. So that's really what I'm paying attention to. We have on Tuesday, Visa, Starbucks, Snapchat. On Wednesday, Microsoft, Meta, Robinhood, Qualcomm. On Thursday, we have Amazon and Apple. So some of the biggest companies in the world. We do also have the PCE coming on April 30th. So be ready. That's the Fed's preferred inflation gauge. So yeah, it's going to be a volatile week. I'm sure more tariff talk as well. This week we had so much in inflows from the ETFs. Just yesterday, we saw another $108 million day from FBTC and $240 million from BlackRock, from IBIT. So last week we had a $380 million day, 936, 917, 442, and 380. So, I mean, you're looking at almost $3 billion, right around $3 billion in inflows for the week. Yeah, that is going to push up the price of Bitcoin. And as we know, this week, the price went up pretty significantly. If we look a week ago, we were sitting right at 84,000. Now we're sitting at 94,000. We could be sitting at $104,000 a week from now. We also know that there are some large entities buying, like, 21 Capital. We know GameStop is most likely buying sometime soon, although it's been weeks since they announced that they want to buy Bitcoin. Everyone's passing around this chart, the craziest chart in all of finance. The money supply is exploding. Now, this is offset by 90 days. You can see Bitcoin generally follows the M2 money supply. Now, there are times where the M2 money supply goes up, and you can see Bitcoin doesn't really do much, but generally it follows. So people are thinking, okay, if this is the case, we're going to see Bitcoin move up drastically, probably around July, which could be pretty insane if this actually followed this line up to 220,000. I need to do more research on this. I haven't really done much digging on this besides just looking at these charts that people are passing around. But yeah, generally Bitcoin goes up with M2 money supply. So I would expect a good rest of the year. And that's not the only reason I expect a good rest of the year for Bitcoin. But yeah, I am thinking we're going to see a bullish year for Bitcoin. And you can see Tom Lee saying that he thinks we have hit the bottom. Let me play this for you. We'll talk about it a little bit as well.
And last week, we talked about how markets very likely made their structural low last week, which was last week, or 2 weeks ago because it was last week. and that we saw risk reward in NVIDIA and Tesla, and of course the fact that the VIX had fallen. So we're still through this period of turbulence, but because of developments this week, I believe that this is all resolved in a positive direction for stocks. So let me explain. There has been this conflict because the macro remains uncertain. If you're only focused on macro, you'd be nervous for these reasons I'm listing here. But if you looked at the equity markets, these things are actually would get you quite constructive. And so this was the battle that had been taking place for the last few weeks between the stock market internals and the macro outlook. If you're macro, you might say we're facing economic Armageddon. That's something that Bridgewater has talked about, a different world order. Some people talk about the end of American exceptionalism. Others say that the top is in for the US stock market, similar to Japan in 1989. And of course, there's many people telling you that you should only be in gold and muni bonds. And gold, of course, is doing great, up 26%. It's the best since 2010. And of course, many people think there's opportunities in muni bonds. But the story of the equity market has been different. There's been pervasive bearish sentiment. You know, the AAII percentage of bears has been over 50% for 9 weeks. And the internal low was registered. We talked about that when you look at the VIX, that a VIX falling, going over 50 and falling below 31 has always marked an internal low. And then later in this video, I'm going to talk about the 4 signs that a bottom is in. But at the end of the day, I think the equity market got this right, and it's resolving, things are now resolving positively for stocks. So what are these signs of a bottom? Well, there's 4 of them, but I'm not going to take it in chronological order. I'm going to start with what was triggered this week on April 24th, which is the Zweig breadth thrust. Now you're wondering, what is a breadth thrust? It's developed by Marty Zweig. It looks at a 10-day moving average of advancing versus declining issues. And the idea is when it goes from oversold, a reading below 0.4, and then back to 0.615 over 10 days, that's a bullish reversal. That has happened 11 times since 1978. And notably, 1 month, 6 months, and 12 months later, stock markets are always up. And this was triggered on April 24th, which was Thursday.
Okay, so let's just pause it for a second. If you're just listening, there's a chart that goes through exactly what he was talking about, the Zweig breadth thrust signal, but it shows the 1 month, 3 months, 6 months, and 12 months return. On average, the 12-month return is 23.5%, the 6 month 13.5%, 3 month 8.2%, and 1 month 4.8%. Keep in mind, the S&P 500 is about 10 to 15% off of its high. So this would indicate that within the next 6 months, before the end of the year, we would see S&P 500 right back at all-time highs. And then 12 months from now, we would see another 10% gain on top of that. I think many people would be quite happy with that. And if we go back to all-time highs on the S&P 500, I think Bitcoin and cryptocurrency is probably right back at all-time highs as well, if not past that.
On April 24th, which was Thursday. On Wednesday, April 23rd, the high-yield market options adjusted spread recovered 50% of the widening. What I mean by that is, on January 24th, high-yield spreads were 292. They exploded to 530 basis points wide on April 7th, but they touched 409, which is below the 50% retracement. That's a positive development because we are now walking back from a recession risk. If high-yield spreads had gone from 500 to 1,000, a recession was guaranteed. But instead, it's reversed almost all the widening back to even levels before April 2nd. On April 22nd, again, happened this week, we had 2 consecutive 90% advancing days. That means that stocks within a couple of days apart had posted 2 days where the advancing gains were 90% or more. And as you can see here, this 3 times since 1979. Stocks are higher 3, 6, and 12 months later. And that happened on April 22nd. Now, I covered this last week, but the VIX closed below 31 after going above 50. So the last thing, of course, that would probably convince everybody that the bottom is in is if the stock market recovered 50% of its decline, which is 54 to 91 on the S&P. So that's the level to watch. The S&P peaked at 61.47 on February 18th. It fell to 48.35 on April 7th. The halfway recovery point is 54.91. And we closed on Thursday at 54.85. So we're 6 points away, 0.1%. So almost there. And of course, that really amplifies and confirms what we've been saying for the past few weeks, that we're still in a bull market. I know it's been horrific and feels terrible. And it was not clear to us if this would be a V-shaped bottom or a range trading bottom like 2011. Now, there are things that can go wrong. I covered this last week. The tariff war with China could turn into a Cold War. Are the shocks going to lead to a global recession? Not yet, but of course they could. Could the financial crisis lead to rapid deleveraging? Could inflation expectations explode? Could S&P estimates fall a lot more than 20%? Maybe. These are the things that people are going to worry about. But we also think stocks got really washed out. And as you know, I've been talking about this with Tesla, that Tesla, we think, got so washed out that they reported terrible earnings on Tuesday after the close this week, and the stock rose and has actually had 2 consecutive gains now, and now solidly trading above its 20-day moving average. That's constructive in my view, and it's a positive surprise. Similarly, Bitcoin's finally catching a bid. Bitcoin fell while gold rose during the February to April period when asset markets were deleveraging. Well, that's because institutional investors were cutting leverage, and when they're cutting leverage, they're cutting their Bitcoin longs. But in the last couple of days, the opposite's happened. Gold actually has been cooling and Bitcoin's been rising, and I think there's a convergence trade there, and that's a lot of upside for Bitcoin. And that's good news for MicroStrategy, which, as you can see here, did not make a new low on April 8th. It bottomed on March 11th at 231. So again, a lot of important, thematically important stocks have looked like they washed out. In terms of granny performance...
Okay, so now he's going to get back into the specific ETF, the granny shots. But I think he makes a lot of good points there. It feels like there's still people that are so worried about the market, but yet we've hit bottom. We've set some higher highs recently, like on Bitcoin, right? Like if you go look at Bitcoin's chart, you can see higher high here and some higher lows as well, breaking above this prior resistance level, right? We got rejected by this 4 or 5 times, back testing, flipping it into support. We're up within spitting distance of 100,000. A lot of stocks bottoming recently as well. And yeah, a nice bounce off at the bottom. I think a lot of people realize that the Trump tariffs could be short term, and even if they're long term, the major numbers that we've seen could be reduced, right? They could be brought down to 10 or 20% tariffs as opposed to a couple 100%. And then the market wants to go risk on when that happens. So I don't know. I don't see the future. I can't see the future, but I have been investing fairly heavily. I've had people ask me recently, like, hey, do you think we should pull out of the market or stop buying because there's so much uncertainty? And I've told them no. I think that's, first of all, make your own decisions, but that's typically not a good way to go about investing, right? When there's uncertainty, you buy the uncertainty, right? When there's uncertainty, that's when you can get discounts if you're willing to invest for the long term. Someone actually asked me yesterday, if you had $20,000, what would you do with it? And I said, well, if you're not already thinking about crypto, I'm not going to try to push you towards crypto, because I think people that get pushed towards Bitcoin or crypto typically aren't comfortable with the volatility, because otherwise they would have already invested in it. or they just don't know enough about it. But I said, this is what I'm buying in the stock world. I'm buying Amazon, Google, VOO, and I think you'll do fine in those. And so far, they have been at a steep discount, especially Google and Amazon. Now, Bitcoin itself looks kind of interesting when you break down the shorter time frame. When you go down to the 1 hour, you can see this prior resistance level that we got rejected by twice. Now we've popped up above it, and now we're flipping it back into support. So be ready for anything. Like over the weekends, there's lower volume, so anything can happen. Tons of volatility is coming for Bitcoin and for crypto. Let me know your thoughts on all this underneath the video. Again, if you want to trade, there are links underneath. I really do appreciate it. I'll see you all in the next one.